Hi, good afternoon, everyone dialing in from Singapore, and good morning to those dialing in from the African continent. My name is Bridget, and I'm the Regional Director for Southern Africa in Enterprise Singapore. I'm based in Johannesburg, South Africa, which is where my office is at, and I cover the Southern Africa region. For those of you who are not familiar, Enterprise Singapore is a government agency that, amongst many different things that we do, we help Singapore companies expand into overseas market. And we're very excited today because we've got a really exciting two panels lined up for you to really talk about the opportunities in Southern Africa. So I know travel right now is very difficult and everybody is trying new ways to do business and kind of keep abreast of what is happening out there. So that was the intention in putting this webinar together. This is part of a webinar series under the Africa Singapore Business Forum, which is going to be held later this year. And today it's going to focus only on Southern Africa. So before we proceed, there are some admin rules, which I'm very sure all of you are very familiar with by now. Everyone is on mute by default, but it doesn't mean that you need to remain silent. There is the chat function if you would like to provide any comments, feedback in response to what the panelists have mentioned. If you do have questions, please use the Q&A function instead so that we ensure that it isn't missed out. And please indicate if your question is also directed to any one of the panelists in particular. Next, if you do encounter any technical difficulties, usually logging out and coming back in would resolve things, but otherwise you can use the chat function again if you would like to reach us. So what we have in terms of the program, there are two panels, as I have mentioned. The first panel is really going to talk about the future of Southern Africa. And we've put together panelists across many different sectors, across the various markets in Southern Africa. And the second panel would comprise just a deeper dive in terms of the oil and gas opportunities in Southern Africa. So we've actually got a very wide audience here with us today. And I'm aware that not everybody is as familiar to the region compared to others. So we put together just two slides, and we're just going to spend 2 minutes just really to give you a quick overview and also to help orientate everyone in terms of the region that we are talking about today. So my office in South Africa is responsible for 13 countries in total. So for those not familiar, it can seem like, wow, quite a large number to kind of remember what all the countries that we are going to talk about, but it might help just to think about them in terms of clusters. And this, of course, is a very simplified way of viewing the region. Of course, every country is different and there are differences in the way that they do business. But kind of starting first with the largest block, which is the Southern Africa Customs Union. As the name suggests, it is a customs union, and the largest country within this whole sub-region is South Africa. It is the most diversified and most developed economy within the region. And the other countries, Namibia, Botswana, Lesotho, Eswatini, are much smaller countries in terms of population, not necessarily in terms of geographical size. So for companies kind of looking for scale, it's always kind of helpful to always kind of group these countries together when approaching this particular region. It is also not uncommon to find South African corporates, who have offices or providing services that really extend into other parts of the region, be it banks, distributors, and they typically tend to be based out in South Africa. The next kind of group of companies that you should be familiar with would be the Lusophone countries. And this really refers to the Portuguese-speaking countries of Angola as well as Mozambique. So for these two countries, at the moment, oil and gas are very important to these two particular countries. And then next group of countries that we will be talking about is the Indian Ocean Islands, which, Mauritius, Madagascar, Seychelles, French-speaking countries, but of course not to say that they don't speak English, especially Mauritius, there you will find a lot of people who speak very good English. And for these economies tend to be a little bit more services driven in terms of tourism. But of course, there are agriculture and manufacturing activities also taking place there. And then the last bucket, kind of termed it as standalone, really for Zimbabwe, Zambia, Malawi, very strong in terms of agriculture, and you also do find a lot of mining related activities also taking place. So this is just a very quick overview to orientate people in terms of the countries that our panelists are going to be talking about subsequently. Next slide. So again, some of the trends that we are seeing as Enterprise Singapore across the region, these are also things that the panel is going to be talking about. So 5 things. Firstly, we're really seeing a growth of digital services. Prior to COVID, many corporates were already going through the digital transformation process, but COVID has really accelerated this. Of course, the rate of adoption is quite varied across the different sectors. Fintech is really where it's really taken off in a huge way, followed by education, logistics, healthcare, government, and then as well as smart manufacturing as well. So the column on the right is where we correspondingly see opportunities. Next, there is a lot of local value addition that the local governments have been driving because they want to build up the resilience in their supply chains, especially for manufacturing as well, to have more products manufactured locally. And when looking for export markets for these products that they have manufactured, their traditional buying markets has tended to be the Western economies, for example, in the US or in Europe. But increasingly, our office has noticed that there has been a greater interest in terms of the consumer markets in Asia, as well as how they can use Singapore to access many of the markets out in Southeast Asia, as well as in China or in Japan, for example. In terms of energy, LNG is really taking off. We see kind of developments, lots of projects happening out in Mozambique, in South Africa, even Angola as well. So this is definitely something that we see, definitely worth paying attention to. That's why we have a panel on the sector. And the last one is really the privatization of state-owned enterprises, which could also open up, many opportunities. In South Africa, there's conversations about state-owned companies being privatized. In Angola, for example, for Sonangol, they are really looking at how to streamline operations to be a lot more efficient. So this is really it in terms of what we see as a trend. And it gives me great pleasure to kind of kick things off with our first panel and to invite Daniel or Danny, who is from South Africa's Rand Merchant Bank, to help us moderate the session. So I'm going to invite Danny to kind of switch on the camera and take it over from me.
Fantastic. Thank you very much, Bridget. I hope everyone can hear me clearly, which is the #1 line that everyone used during the course of 2020 and what we can expect will also likely be this year. As you guys have heard, my name is Danny, and I'm an economist at Rand Merchant Bank, specifically focusing fortuitously on sub-Saharan Africa. Some of my primary markets of interest have been Zambia and Mozambique, notwithstanding Namibia, given just the impact that COVID-19 and the larger pandemic has had on these various economies. Today, I've been honored to host a very strong panel group who will be discussing the various sectors that have then effectively changed during the COVID-19 and the effects that it's had, given the various restrictions that our economies had to implement, but have some better understanding of then what we can expect over the longer period of time. It's so easy and comfortable for us to become focused on the short-term risks, but it's also important for us to understand that, as Bridget indicated, most of what we're seeing in sub-Saharan Africa are strong sectors that will likely be differentiators in about 5 years or 10 years across the region. Very briefly, you've all had the opportunity to look at the profile of the various speakers. You can see them there on the screen. We've got Mr. Mohamed Akoji, who's the CEO of Imperial Logistics, Mr. Zano Mataruka, who's the Senior Investment Officer at IFC. We also have Mr. Azim Karimji, who's the Director for the Karimji Limited, focusing specifically on the food and beverage industry. But also at the same time, we've got Mr. Carl Bao, who's a managing partner for Frontier Capital Markets. For today's discussions, we will really hopefully take anywhere between 50 to 55 minutes, given that we've got another panelist coming soon after this. So I implore you, during the course of today's discussions, if you can, post your comments and questions already within the chat box, and we can address them as the conversation ensues. I'd actually like us to start off by speaking to Mr. Carl this morning. And Carl Bao has had the opportunity of doing direct investments across Zambia, a market which all of us know received a lot of attention during the course of last year, both in the positive and on the negative side. Positive from the perspective that there are massive opportunities that the country will likely gain given copper export earnings, but then negative from the perspective that the economy had to default. Carl, you went directly into this economy a few years ago. doing direct investments into this market. Could you maybe start off by telling us, A, why you picked Zambia, B, what type of opportunities have you found as a direct investor into this section? So Mr. Carl, if you could just tell us a little bit more about your experience in Zambia.
Morning, Daniel. Thank you very much for the introduction, and good morning to all the wonderful panelists as well as all the viewers. So by way of introduction, as Daniel mentioned, my name is Carl Mbao, and I'm managing partner at Frontier Capital Partners, based in Lusaka, Zambia. And so, to answer your question, Daniel, the original impetus for coming to Zambia for me is I'm a Zambian citizen, so that was obviously a one of the motivating factors. But as I'm sure we'll discuss further on in the panel, there are a few interesting things about Zambia that make it a very attractive investment destination. I mean, one, from a demographic perspective, our firm is kind of rooted in a three-pronged thesis, which basically looks at how investment can position itself to benefit from three core demographic trends that we're seeing in many places in Africa, but Zambia being one of the attractive ones. So if we look at population growth, urbanization, and income growth, these three trends have been quite strong, generally regionally, but something that we've perceived to be quite attractive in Zambia specifically. I mean, if you look at some of the numbers and if you look at some of the statistics, Zambia possesses a very young population. Over 50% of the population is under the age of 30, and it's a rapidly growing population, 3 to 4% per annum, and also rapidly urbanizing. So, obviously this is a double-edged sword in the sense that what it does when you have a fast growing population, it does require that investment kind of match that pace. And oftentimes, depending on a country's, politics and its setup, oftentimes that can be done by government expenditure and government investing. But we were of the view as a firm that we needed to step in from a private capital perspective to bridge some of that. So from an opportunity perspective, that's how we see it and how we conceive of it. I also think geographically, Zambia is quite interesting because it's smack dab in the middle of the SADC region, as it were. We have 8 neighbors. So from a logistics perspective, if you're crossing the continent, if containers are arriving at Dar and they need to get anywhere in the region, there is a reasonable probability that you have to pass through Zambia. So from a logistics perspective, from a positional perspective, it's also interesting. I guess some top of the line facts, I guess, as it were, about Zambia. It's a population of 17 million people, GDP of just under $20 billion, and geographic area of about 752,000 square kilometers. So those are some overarching facts about Zambia and some of the things that were attractive to us, aside from myself being from here.
I think there's something you touched on that is quite critical. So a lot of the entities and companies that are operating here may already have some interest in operating in Zambia. They may already have funding. As a company that intrinsically sources funding for the purpose of investing in Zambia, are you starting to see some of your investments bearing fruit given everything that has taken place? What are some of the strategies that you have to rethink with respect to some of the underlying assets or sectors that you were involved in? And on that, maybe you can tell us just the journey about investing in Africa. Are you sitting as a private equity player, or are you doing pure venture capitalist form of funding?
No, that's a very good question. I guess I'll split that in two. Maybe I'll tackle the latter half first about private equity versus VC. So I guess, one thing that's, I guess, important to bear in mind when one enters or ventures into Africa with an investor's hat on is that, broadly speaking, the financial markets are, with one or two exceptions, slightly less deep in inverted commas, as one would find in the Occident or in the Orient. So what that means is that the large institutional players, say the standard or traditional private equity players, in the recent rounds that we've seen over the past 3 to 5 years, there's been incredible amounts of dry powder raised for, with the thesis that investing in Africa was attractive. And while it is, one of the difficulties that the industry has faced is scale. So the availability of investment grade deals is something that is not necessarily ubiquitous. So what that means is you either need to be very patient to write those big checks, or conversely, take a view as we've taken as a young and small firm. I mean, we incorporated just over 2 years ago, but we've decided that we're comfortable building deals. So we have 3 strategies that we approach the market with. That being, we are comfortable taking on a greenfield strategy. We also do joint venture with private investment players, as well as family offices that are operating in the region, and 1 or 2 institutional players that are on our books as well. And we're also interested in acquisition. So that flexibility, or I guess nimbleness, is something that depending on where you sit, could be an asset to you. And we've decided to take on that strategy. But going to your other question, which is, how have things evolved and changed, I guess, over this time period? Obviously, the big kind of elephant in the room being COVID. We started on a very strong tear, with a reasonable amount of our portfolio allocation towards the tourism sector. So we actually have 3 assets on our balance sheet currently, which are positioned for the tourism sector in Zambia. That's in the north of the country, on the shores of Lake Tanganyika, which is a beautiful place, by the way. So I encourage everyone to make the trip if they can. In the south of the country, in a national park known as Lower Zambezi. And we also have a site on our balance sheet in the capital, in Lusaka. So all 3 of these are primed for development in the tourism sector. And we've gone through pretty advanced stages with everything from feasibility to architectural design and engagement of operators. One of whom, which we talked to, is actually in Singapore. So on that journey, obviously we've encountered the advent of COVID. So that's really put a global tourism market, and has basically for us been an impetus to for the time being, for 2021, basically make a strategic call to double down our focus and our efforts in our 2 other sectors. So we have 3 strategic sectors, the hospitality falling under our real estate strategy, but we also have a strategy that focuses on agriculture, and then a small allocation for renewable energy. So where the macros are sitting as far as Zambia is concerned, and also what has happened with COVID, has basically put additional fire behind us to double down on the trends that I spoke of earlier, and how they're going to affect the agricultural industry. And we started to deploy capital into livestock, as well as some of the retail aspects of agriculture. Hopefully that's not a long-winded answer.
No, that answer actually allows me to dovetail quite well to Mr. Zano. I think Carl has painted a somewhat dire picture, though in a very optimistic way, as to what is actually taking place. I'm also quite bullish, Carl, on the agri sector, but we understand the challenges that COVID-19 has caused just regionally. Zano, you have access to a much larger type of funding entity, being part of the IFC. You're seeing several economies, Zano, going through the effects of the pandemic. What has been the experience of IFC when it comes to funding and across the continent? But then secondly, to that point, how has it changed? So what have been some of the discussions, if you can share, that you're having within the firm?
Thank you very much, Danny, and welcome to everybody who was joined. As was mentioned by Danny, my name is Zano Mataruka. I'm with the International Finance Corporation, which some of you may know that is part of the World Bank Group, and I'm the head of agribusiness in Southern Africa. Now, with respect to the quick 2 points which you have asked, Danny, the first point which I want to make is that if you look at visual across sub-Saharan Africa, agribusiness or agriculture accounts for, on average, about 40% of the gross domestic product. Now, in some countries like Botswana and South Africa, that ratio is a little bit low, but that's like the average figure. In addition to that, you'll find that in many African economies, over 50% of the population depends on agriculture. Now, obviously, the advent of COVID has had an impact. But as an institution, we pride ourselves in being counter-cyclical, which means that we actually go in the opposite direction. So when people are crowing back, that's where we actually have a role to play. The main challenge which we've obviously faced, and I'm sure everybody can relate to this, is that when you are looking at doing business, and for us as an investment house, when we're looking at doing investments, we obviously need to do appraisals or due diligence. And the lockdowns or travel bans have created a complication. That being said, we have adopted to the situation whereby now we're doing what we call virtual appraisals when we're looking at our deals. And at times we take advantage of technology. And this is an area where Singapore is really way ahead of many countries. For example, if I'm appraising an agricultural operation, in some cases we've used drones to actually go and look at the operations. I hope I've answered the question.
It's so difficult to do virtual appraisals, I can imagine. Back in my analyst days, there always used to be a section that was allocated to having a chance to understand management that will be operating in that business. And this must be quite difficult during COVID-19 because you can't have proverbial coffee chats. But Mr. Zano, given all the abilities that the firm has, what have you seen in terms of sectoral trends? I think this is probably one of the things that we want to focus on. You're looking at agriculture in general, but is it more livestock marketing that we're working with, like Carl mentioned? Are you seeing a lot of opportunities with irrigation schemes across the sector? What specifically seems to be the next area where we're going to pivot into?
Thanks, Dan. And I want to build on to what Carl said earlier on. So there are some common themes which you find across sub-Saharan Africa and Southern Africa in particular. One is the degree of urbanization. So we are seeing more urbanization, more people moving into the urban areas. Two, the youth dividend. We have a lot of young people. So against that background, what you'll find is that virtually every government has made agriculture the centerpiece of its development agenda. So every government has made that the centerpiece. Now, within agriculture, across Southern Africa, there are varying degrees of sophistication. So if you take, for example, South Africa, it's basically a commercial agriculture-driven economy. Then as you move up, the degree of commercialization also reduces. So some of the areas where you find high levels of commercialization is Namibia and Zambia, and to some extent Zimbabwe. But when you're looking at Malawi and Mozambique in particular, they are primarily small-scale farming countries. Having said that, your question is what are some of the key themes which you're observing? One, some countries have got some areas of key competencies. So if you take South Africa, for example, what you find is that tree crops, fruits, South Africa is a global leader in tree and in fruit production. So they're a key exporter of citrus. They are one of the biggest producers of avocados and so on. Then another area which you also find where the Southern Africa has got some core competence is the beef industry. So if you look at the beef industry in Southern Africa, it's actually linked. So if you take Botswana, South Africa, and Namibia, their beef industry is linked. And they've actually made big inroads in terms of exporting to both Europe as well as to Asia and the Arab countries. Then if you take nuts, Malawi and Mozambique in particular, they actually have core competence in nut production. So you find a lot of Singaporean traders doing business in these markets. And then lastly, one area which we've also found, because of urbanization, the dietary trends are also changing away from traditional grains to, for example, wheat-based grains. So what you find is we have a lot of milling companies which have been set up in virtually all the countries, but there's a recognition that the production of grains, some of our countries are not as competitive. So you have wheat being imported and then being milled local. So there is actually a growth in the food processing industry. Thank you.
That's absolutely what I wanted to hear. That transition in terms of the agricultural sector, not only regionally in terms of countries specializing in certain goods, but then you mentioned something very interesting where we're potentially moving over to a more processing-centric type of operations. At least an expertise around this will likely need to be built. Mr. Zim, I want to pull you in here. You're operating a company that does already food and beverages across the region. What has been your experience during the course of 2020, and what can you tell us about some of the economies in which you're operating, primarily starting, of course, with Mauritius, and the experience you're having in terms of moving product?
Okay, thanks, Daniel. Well, obviously, I'm coming from purely private sector point of view. I mean, it's a family business over the last 130 years, well diversified into mobile telephony, pay TV, but of course, we have food and beverage, which is my direct responsibility. Now, in terms of Mauritius, obviously, we went through like the world. I mean, obviously, we were a bit more severe in terms of the lockdown. Started in March. It was actually a total clampdown. A very strict clampdown, obviously borders closed, and the whole, even the shopping environment for a week was actually in an absolute curfew. It was quite strict, but it re-emphasized the need for local production because obviously global supply chains stopped, both air cargo and even shipping stopped. So, but we managed to get to a zero case in about 6 weeks, and actually have been COVID safe since May. What that learning has been, though, is that obviously we were significantly dependent on tourism. To some degree, it was the largest industry, about 20% of the GDP. But the combination of the factors really has put a certain eye-opening in terms of obviously diversifying the economy, but more importantly, in getting autonomy, if we can, in terms of food. So clearly, in our environment, food is an issue because we actually import significant amounts of our raw materials. I mean, and today's processing, like Zano mentioned, we have our own flour mill, but we do import wheat. But we are primarily, interestingly, still a very large agricultural economy where we still export a fair bit of sugar, but it's sugar out and then in some ways food in. The challenge is now for us as a food and beverage business, I mean, I'm combining a bit of a minor and a macro kind of look. On one hand, for us is obviously driving efficiencies and broadening the portfolio, because obviously trying to diversify is a way out to de-risk the situation. We've been a Pepsi bottler, which is our prime beverage business since 1955, as well as we import. So we have manufacturing locally. At the same time, what we're investing massively, obviously, is in logistics, because clearly to diversify your portfolio, improve logistics is key. So we're actually investing in a significant new distribution center, which is going to be state of the art. And I think combining that with Mauritius, I think that is the balance of way forward, because we're also strategically looking now at back offices, maybe looking at reflecting, working with local agriculture, and the government actually is giving a lot of incentives on that to create now maybe a new sense of small entrepreneurs, because obviously in our environment, we've had a significant growth. I mean, the population is quite small, 1.7 million, 1.2 million, 1.3. But the GDP per capita is at now close to $12,500 per head. So clearly the structure of cost is much more capital intensive for the youth going forward, and the government is actually pushing that in a certain direction. The other direction of push for us, I believe, would be sustainable practices. I think that is key, both from our group. I mean, this is, of course, very close to our values, but we're seeing going forward that I think sustainability, but I think in COVID, eyes were opened in some ways about, obviously, health became an issue, a serious issue. Environment as well became an issue in the sense that you kind of saw what happened when everybody slowed down from a point of economic activity. So we did see, I think, generally nature in some ways coming back, and the combined effect of both health and environment is pushing towards, at least in Mauritius, I think a lot more sustainable practice. So we are looking at higher investments in those principles. I think that also the interesting with Mauritius is I think also the outward connection, which is I think why the strategy now maybe from a business, we're looking at building at what potentially the government has built. Last year we signed over and above all our other customs unions, a free trade agreement with China, which is now operational. Last week, the government signed a comprehensive economic partnership agreement with India. So we have now a very strong economic agreement with India. And obviously, as an African country, we are fully being a member since the African Union in both COMESA, SADC, and of course now the CFTA. So I think Mauritius, also strategic, what we want to see now is can we leverage this to in some ways rebalance maybe the economic density with Europe, because obviously tourism as well as trade is still very much Europe directed, where we feel we can now be, I think, a stronger player in a more south side supply chain and connecting maybe Asia with Africa in a much more effective way, which then can potentially strategically, I think, build, because obviously with our IFC and our global DTA arrangements, Mauritius is not just a fiscally great place to invest from, but also with the trade agreements, is a great place to put substance so that whether it's manufacturing, food chains, supply chains, fintech, and other developments can actually happen around us. And lastly, obviously, we are looking at, because there is now a significant, our blue economy is quite significant, when Mauritius enjoys about 2 million square kilometers of ocean space, which is actually bigger than South Africa. And we are looking actively at that, because the government is in the process of marine spatial planning and looking at blocks of development. So there is that kind of push for us to strategically contemplate as well, whether it's algae development. There's some people already doing spirulina, for example, in Mauritius. Blue-green alga and other algae is one way over and above our quite significant tuna fishing. But for us now is to go into more sustainable practices. And I think seaweed, for example, it is not just sustainable because it's actually, seaweed is probably the biggest carbon sequester in the world in terms of algae, but at the same time, there's a growing need for, I think, and then there's, I think, untapped resources when it comes to the food, algae as a food, and both in terms of food and as oil as a nutraceutical. So I think this is, I think, for where Mauritius is kind of positioning and where we as a group are looking strategically in local diversification, expanding backwards into hopefully maybe connecting with agriculture, local agriculture, leveraging our brand strength, our distribution strength and manufacturing expertise with maybe even small operators, so as to get a broader sense of food into Mauritius, and then connect internationally with building that chain. And then building obviously on the global connections as Mauritius is doing with its, whether it's the Indian market, also Chinese market, and obviously our close relationship with Africa is, grows stronger and stronger every time. So we need to build that so that I think we can really build leverage on what we have as maybe a stepping stone between the two. I mean, let's face it, I mean, when you think about it, between Africa and Asia, economics do say that by 2050, 50% of the world's GDP will be there. So I think we need to build that way.
I wanted to jump in there, just on that point. We are in a season where, as a continent, you aptly stated, we are firming in a lot of our trade routes and trade agreements. Specifically with Asia, we have done this over the past few years. We're re-looking at some of our EPA agreements with the UK. There is a lot of interest on the continent. As in, if you were to pick 3 sectors, though, in which, in your view, we could potentially be a competitor in a manufacturing space, what would it be? Given just the experience your firm has had over various sectors, and then given your understanding regionally of SSA, what could we do competitively within the manufacturing space that you potentially think right now we are somewhere underwhelming in terms of our involvement as an SSA region? Thank you, Z.
Okay. Okay, it's a bit of a complex question because actually, Daniel, you've tied in two markets, a double equation in some ways, which to some degree Mauritius is familiar with, in the sense that, firstly, we started the past with growing our local industry by putting in import duties to protect and create local industry. But at the same time, we had an EPZ business which we exported to the world and especially to Europe. So your question, I think, competitive advantage, I think, may needs to be answered in two ways. One, I think we need to see amongst ourselves, what can we do better? I think infrastructure needs, hopefully, is the big barrier. We need to be able to break that down so that we can trade better amongst ourselves. The common factor then also, I think, is brand building. I think we need to global Africa, and by breaking down the barriers of trade, I think, for example, maybe the Kenyan and South African experience, especially Kenya as an example. Kenya is already one of the significant flour exporters to Europe and to the world, and vegetable. I think obviously Zambia had, of course, Malawi had tobacco and everything else, but I think we need to go into more value-added stuff and then label that with branding so that we can become, and I really believe in sustainable practice. If you do believe, and I think Africa has a greater potential because I think industrialization has not penetrated as much as, let's say, in Brazil, for example, or in the EU, where obviously the land is totally industrialized and it doesn't necessarily work that well in the future. But I think Africa then, I think, has a strong advantage if we adopt a combination of a better Africa brand and sustainable practice. I think agriculture can be a huge win, obviously, to make our countries healthier, but at the same time exporting to Europe, because they are, I think, there's a huge market for that. So potentially build on the agriculture, but add more value. Other than that, quickly, I think three other sectors. I know that the challenge really is for us to move away from just being primary resources exporters and add value. There, I think it's growing our local industries and local market would be the next, I think, competitive edge. So I personally feel that we really should be looking at regional development ourselves and building our industries rather than saying, look, can we export more to through the AGOA or to the EU? Those are great for sure, but I think if we can build local champions and which can and partners, I think for us the way to go. And then of course see how we can connect with India and Asia to some degree on that side. But I think the whole issue of supply chain, I think, is very important.
I want to actually have I want to have Mohammed come in after you, Azim, because you did earlier touch on the logistical impacts and the difficulties that we're finding even across the continent. You also now just touched on even infrastructure development that we still need to work on to build a wider chain. Sorry, I'm not sure if the network is a bit edgy here.
Yeah, so yeah, and just as a quick comment,
forgive me for that, Azim.
I was actually the vice president of the CBC, which is the Comesa Business Council, and one of the things we noted while we were there is that intra-Comesa trade was actually, I think, 8%. So that the partners of the Comesa actually traded only 8% with themselves. The rest was external. And I think we found that and biggest barrier was actually, moving a container from Mombasa to anywhere. Or from Dar es Salaam to Kigali was like $3,000, $4,000, $5,000. I mean, it was just unheard of. I mean, how could you trade if there's no rail or no roads? And I think Mohammed is probably a much better place for me than me to talk about it. But that was a significant break.
Yeah, Mr. Mohammed, I think your introduction has already been given. Already within Comesa, it's 8%. Intra-Africa trade, we're talking about it being as low as 16%. We have a pandemic that disrupts supply chains. As an economist, I've used the word supply chain so many times during the past year. I don't know of any additional synonyms. Mohammed, maybe you can give us your experience of what you actually saw. And as you deliberate on some of your answers, what are you seeing from the tech sector as well that you think potentially we should start really focusing on as a continent? A few questions already streaming in just with respect to tech. So maybe you can introduce that as well. Mohammed, over to you.
Thanks, Daniel, and thanks for the opportunity. Yeah, logistics is a major challenge, as you've heard from some of the previous panelists as well. We are an African-focused logistics company operating in about 20 markets across Africa. So we do have quite a good visibility, in terms of the opportunities as well as some of the challenges we face in the industry. COVID has had a massive impact, as you said, in terms of supply chain, but in that there's also been a lot of opportunity. I think two of the key words that we have, discussed with our clients is around resilience and visibility. And I think COVID has resulted in a lot of people wanting to understand their supply chains better in terms of resilience and visibility. So I think, with technology, and we're fortunate as Imperial, we've got really an end-to-end service that we can provide to our clients. We can use technology to enhance the resilience and visibility of a supply chain. Be that as it may, logistics, in terms of getting product into end markets, can be up to 75 times the cost of the product. And if you compare that to more developed markets, it's about 6 times. So you can just see the inefficiency that is in our supply chain. With the growth that is expected from both the consumer sectors, the industrial sectors, the agricultural sectors, as you heard, we certainly believe logistics is going to be one of the fastest growing industries on the continent. And our purpose as an organization is to connect Africa to the world and provide quality products and services to its people through what we provide. In addition to just providing road freight and warehousing solutions, we also take product into the last mile. So in the healthcare and consumer sector, we go to thousands of points of sale in the informal and formal markets across East, West, and Southern Africa. And, those points of sale, in my mind, with technology, we could integrate better with them. And we see a lot of opportunity in that space in terms of using our last mile distribution to enhance the efficiency and access, for consumers, for products and services. So in terms of Imperial, we are a big road freight organization. We do contract logistics, which is warehousing and distribution. And then we also act as a sales organization, for multinationals looking to get their product into some of the fastest growing but most complex markets, certainly from a logistics and supply chain perspective. One of the other things of COVID we've seen, definitely local manufacturing. There's a lot of pressure, on our clients and principals to do more value add. We are starting to set up contract manufacturing and contract packing operations to integrate with our logistics and market access services. And then certainly the healthcare sector, where we are a major player, about a third of our revenue on the continent is in the healthcare industry. We're seeing certainly a lot of inquiries from the public health and the private sector in terms of understanding the supply chains better. And with control tower technology, we are certainly supporting that sector, but also in terms of providing access, to consumers and on the continent with regards to healthcare is a big part of our job. So yeah, I think for me, local manufacturing, resilience, visibility, healthcare are all sectors that have, become more in focus in terms of post-COVID. And then also the contact-free economy. In a market like South Africa, we've seen e-commerce, as a channel from a retail perspective, double in value over the last 12 months. So, that's a major trend, I believe, that will continue and, will be a very important channel in time to come. We have refocused the organization on making digital and IT the heart of our strategy, because we've got a lot of infrastructure and assets across the continent, as you can understand. But I think where the opportunity lies for Imperial and for us becoming more value adding to the countries and economies we serve is to use technology to take out costs from the supply chain, and through that, make it cheaper for people to get access to their products and services. So we believe as a big logistics company, across the continent, we can certainly leverage technology across our capabilities, but also in the industries we serve to, improve the supply chains.
Mohammed, so I'm struggling right now because I know what's going to happen after the pandemic. Every economy is going to try to make sure that they build roads, they build a railway network, they do all forms of construction to resuscitate these various economies. Are you seeing the same level of interest in building, whether it's underlying cables that are used for tech, the space, just with respect to the various countries in which you're operating? Are you seeing additional MNOs operating? What has the appetite been like from our governments with respect to actually boosting up tech infrastructure before we even start talking about some of the products that we can build in around that?
Yeah, look, there's a lot of investment going into, connectivity and bandwidth, etc. If you take a market like South Africa, regulations has restricted, how the economy can be opened up in terms of, more efficient data, etc. But, I think if you look at, some of markets like Kenya, they've become leaders, in terms of how they've embraced, the change in terms of technology. And with mobile technology today, I don't think, those infrastructure challenges are as big as we think. If you just look at how the mobile, device has, sort of leapfrogged many other, means of interacting electronically. And in Africa, everybody has got a cell phone. So, or, cell phones have got a large penetration. Now, how can we use, mobile devices to be able to leapfrog some of the challenges we face from an infrastructure perspective? But there are companies, that are investing heavily in, in infrastructure around mobile, around telecoms, etc. The eco-nets of this world are certainly focusing on connecting Africa. There's many other companies. So I don't think there's, a lot of challenges in terms of, governments blocking that. I think it's gotten better, and I think it will get better, as we go on our journey of becoming more technologically advanced as a continent.
Thank you so much for those answers. I think I was going to ask you whether or not you believe we'll be able to get Africa Free Continental Trade Agreement really going over the next few years between you and Azim. But I've decided to pause that question because I don't want to put you under the gun and to commit to an answer right now. But it is something I think the panelists and also the attendees would be keen to know whether we can actually ramp up some of our cross-border product movement as quickly as we say we would. But I don't want you to answer that now. You can even answer that in the chat. What I do want to focus on is actually Mr. Zano. Before we come back to these discussions around our various sectors, Zano, you're well aware that international companies, like what we're seeing now with a lot of companies from Singapore, will be coming into the continent. They have funding for some of these sectors, but they may not understand the nuances of doing business across the continent. What are some of the things you can advise our attendees with respect to either funding directly into direct sectors or partnering with a DFI like yourself across the continent? Zano?
Thanks, Danny. So the first point I want to make is that IFC, we have a presence in over 25 countries across sub-Saharan Africa. So we are in virtual every country. where we don't have a presence, we do have a good network through our World Bank offices. So if I'm a potential investor, certainly reaching out to DFIs like IFC is very, very helpful. We are looking to partner with the outside investors, and we provide, in addition to capital, we also provide local knowledge, because we know the key players in this market and so on. So if I'm an investor, for example, going into Zambia, my first port of call will be to contact, the likes of IFC, the likes of CAL, the private equity players, because they know this space, okay? They know the key players and so on. I think when you are coming as an outside investor, the selection of your partner is very, very important. If you're going to Mauritius, you need to know somebody like Azim, right? They know this, they know the regulations, they know the space, and that is always very helpful. But let me also broaden my answer down here to put something on the table. The way to look at for example, Southern Africa is to not look at Zambia, Malawi, or Zimbabwe, or Mozambique in isolation, but we have to look at it as a subcontinental body, because those markets on their own may look small, but they do have regional trading bodies like the Southern Africa Development Corporation, SADC, and through those regional trading bodies, you then get access to a bigger market. So you should always look at it from that perspective. Thank you.
I think that's a valid point, the regional approach. Mohammed, Azim, either one of you willing to tackle the question on the free trade agreement? Just note this conference is being recorded, so be very careful with your comments. But any one of you, please. How soon do you think we could get this going? Are you optimistic about it? And just on that, while they answer that, I want to thank all the attendees. We can see the questions coming in. Also want to thank the panelists for already addressing them, as we've naturally, as you can imagine, moved into our Q&A session. So Mohammed, Azim, pretty much, what's your take on the free continental trade agreement?
Mohammed, why don't you go first?
Yeah, look, so it's obviously early days, and I think the intent is there. There's a lot of work being done, in terms of, how to also protect the local economies of some of the markets that are signing up for this, because I think it would be naive to think that, overnight, certain countries would just allow other countries on the continent to export their goods into their markets. So I think my understanding of it is now the agreements have been signed. There's a start date that has been penciled in for 1 July in terms of it actually being rolled out. But there's a process now that the countries are going through whereby they're listing certain industries or product sets that they would still like duties to be charged on to protect some of their local manufacturing sectors. Because I think if you look at South Africa and Egypt on the continent, those are probably the most diversified from a manufacturing perspective. And some of the other countries are also trying to build manufacturing bases. And if they just allow a free trade between the countries, I think the countries that are most advanced and will benefit from is South Africa and Egypt, because they've got quite developed manufacturing sectors. So they're looking at a structure where there's be certain products that will be restricted, not restricted, but there'll be still duty or tariff charged. And then there's a phasing in terms of what the duties will be on those products. So I think it's going in the right direction. It will probably take some time, but to predict timing on something so game-changing is very difficult. But as I said, the July has been sort of date that has been put in the ground in terms of, getting this forward, going forward with this. But that's that's sort of the intel I have at this stage. Until there's more visibility, it's hard to predict exactly, when it will start getting momentum. But there is things happening. It's not that, it's just radio silence at this stage.
Before Azim answers, Mohammed, there's a question here. Do you have a view on cold storage and just generally cold storage logistics across the continent? I'm assuming this has a lot to also not only do with the agricultural sector, which has been asked across the chat, but if you even think about the initial debates we were having around the vaccine and whether we'd be able to store it. Could you maybe comment on your experience with cold storage?
Yeah, so it is definitely an area of, potential because, you're quite right on the healthcare sector. Cold storage is an important part of the supply chain, and we do have, proper warehouses that meet the cold chain requirements to store and distribute healthcare products across Southern, East, and West Africa, because our clients and principals require that. So in terms of the vaccine, if the question is linked to that, yes, absolutely. We do have facilities across Africa that can store the vaccine at 2 to 8 degrees, minus 20 degrees. And even in certain markets, we can store up to minus 70 degrees by using dry ice. So we are obviously actively engaging governments across the continent to support them with their vaccine distribution, including South Africa. In terms of the FMCG sector, we have stayed away from cold chain because of the complexity of it. But now that we've got quite an established route to market, in healthcare and FMCG, we are now starting to expand and looking to, add that capability to our distribution platform. So it's definitely something that we see as an opportunity. And like I say, technology again becomes quite important in terms of visibility and maintaining the cold chain from warehousing right to the point of consumption. And we have that technology to be able to do that. So no, it is an exciting space and certainly something we will add as a category in time.
Yeah, quickly, Daniel, I'm not much to add on what Mohammed has said, but I think I am too, well, I guess we have to be reasonably optimistic, but obviously, I think one of the positives are that within the African continent, there has been to some degree a certain growth or a bit more leveling of economies. So hopefully that will help. There's still, of course, gaps between many countries, but I think hopefully, and let's face it, I think the SADC worked and to some degree COMESA has worked. So learning from these regional blocks, hopefully we can now build on those experiences and build an African bloc. I think it is even more when we look at the world now, when the US and China starts fighting in terms of trade, we do get left behind. So if we can obviously build amongst ourselves a larger trading bloc, it gives us far more resilience overall. But obviously, there are practical issues, but I think political issues seem to be much better than it was in the past. So I think the political will to get it going is there. Now, let's see how it evolves. I think the dates have been set. And let's hope that we can then build the consequent infrastructure required to make it a practical reality. I think if we have a certain clarity on what we call sensitive industries and have that at least out in the open and have phased reductions in duties, I think that's Mohammed has made. It worked with SADC and it allows SADC to take shape. So we've got at least now practical experiences on how to make a free trade agreement work in Africa. So I think it seems to be happening. So at least from a Mauritius point of view, we are actually probably one of the most open economies We only have 7 to 8 sensitive industries, and the rest is actually fully open. So we actually are looking forward to be able to, especially in terms of goods and services, to be more effective as an African partner. But I think it's probably the most positive side is that the political will seems to be much clearer, and I think that makes things, obviously, is the first step. So I think I'm cautiously optimistic. Obviously, the proof, the pudding will be in the eating and in the executing of all these, because it is a very complex beast. I mean, Comesa, I mean, if you look even East African communities, it's taking such a long time. And that's just, 3 or 4 countries or whatever it is. Now to bring 50 odd countries together in Africa is still a very complex juggle. It's very complex. So, but hopefully we can get critical mass and have those countries which are more or less now align themselves in terms of economic development and have them move forward where they are, and that they would create hopefully critical mass that would pull everybody else in.
Azim, I think what you've provided is truly a base for some of the sentiments that I also carry. It is a very intricate system, getting these trade routes, trade agreements running. The experience we've already seen across Africa tells us that it will take a little bit of time. But there's a fantastic question here for you from Mr. Rahul, who wants you to tell us, if you can, what advantages does Mauritius have over an environment like South Africa for an investor wanting to invest across Southern Africa? So this is a moment for you to give a limelight and some of its great advantages to
I guess
vis-a-vis an environment like South Africa.
Okay, very quickly. First, obviously, I guess I go through the regular. I mean, Mauritius has obviously been a democracy for the last 50 years, over 50 years. It has a clear, separation of executive judiciary, very independent judiciary. So the political, economic, and legal environment is very stable and sound. Laws work. There are appeals. There's in arbitration. We signed the New York Protocol in 1995. So effectively, Mauritius can also offer ADRs or alternative dispute resolutions for international contracts. We see that already happening with actually a lot of the big miners, for example, coming in, base themselves in Mauritius. Because obviously, I know if you are either a Chinese investor or investing, let's say, in Nigeria, nobody would really like to, where do you put your disputes when it comes to a contractual resolution? I don't think somebody from Lagos is going to go to Shanghai for dispute resolution. No, somebody from Shanghai will go to Lagos. However, coming to Mauritius to settle disputes is actually a very quick and efficient way of doing things. Obviously, our connection is there. We are members of SADC, we are members of COMESA, we have signed the CFTA. So Mauritius is fully part of the African community. So there's no issues there. Taxation, of course, is lower. The fiscal environment is very competitive from a point of view of movement of capital in or out, absolutely no restrictions, and of course, tax at a very competitive rate. Furthermore, it is also, we've got one of the most efficient ports in Mauritius. The Mauritian port is actually dug or has been recently upgraded to 16 and a half meters. So technically, we are actually receiving 12 to 13,000 TEU ships, and actually can go to 15. So actually, the port can handle large cargo and is very well connected. We do a lot of transshipments, about 700,000 containers a year, which allows that a quick access, whether it's Mombasa, whether it's Dar, whether it's Durban, and via Mombasa, Mozambique, we can actually connect to East Africa, and of course, Cape Town and around. Another a strong advantage is actually the Mauritian experience. We actually have an Anglo-Saxon and French history in some ways. So Mauritians will speak English and French. Our law is actually a mixture of the common law and the Code Napoleon, which means that somebody coming from here, the team which he will have or the advisors which he builds up are very comfortable working with anywhere in Africa, both East and West, and of course South. So you actually have a very good base to work from. Now, obviously, pre-COVID, we had daily flights to Joburg, daily flights to Nairobi, 2 flights a day to Dubai. But obviously now, of course, barring the highlight is a connection. And lastly, I think also we've got very strong connections when it comes to IT and stability as well. I mean, we've got, for those who are in fintech, our environments are very strong. Mauritius is actually one of the things which we've done on the government side is even from a point of national switch, so all banks are connected to a national switch. So fintech is also now taking shape. More importantly, the sandbox licenses and the other licenses and the IP incentives. For example, if you do register your IP in Mauritius, you actually get an 8-year tax holiday. So the incentives for even settling down IP-rich businesses in Mauritius is, I think, very, very strong. And then, of course, the physical proximity to, as I mentioned, to the ports. So Mauritius, from that point of view, I think, can be a very interesting base. Also, I think just the money flows. I mean, Mauritius's IFC probably has something like $650 billion under management. It's the largest private equity investor in Africa. Well, of course, pre-COVID-19, I think we did about $25 to $30 billion moved into Africa from Mauritius. So significant money flows. And again, because of the fiscal transparency and the infrastructure here allows for that. So it does allow for I think a pretty competitive place to invest from and to go into Africa.
Thank you so much, Azim. I actually wanted to focus on a question that came in earlier. Mr. Carl, what's your take on usage of blockchain technology? I know we've already answered these across the chat, but I do think that was a valid question that was asked. With your experience as a sophisticated investor, what would you say is the next phase for Africa with respect to blockchain?
Well, thanks for that question. I think that that's a very valid question and something we need to be looking at in terms of applications. For our investment portfolio, I'd say the most direct links or the direct areas of application would be in agriculture. As mentioned in one of the Q&A sessions, I think the commodity markets could highly benefit from real-time transaction data, from kind of standardization of trading, which would allow for price discovery and other things. So, it's something that I think everyone here might be familiar with. A large percent of the volumes and values being traded within, probably every African economy, as far as the commodity sectors, is informal trade. Now, what that means is you have basically unstandardized industries in some ways that, if we could think about how we integrate these players in various points of the supply chain, from primary producers, whether it's the smallholder farmer who grows beans on their little lot and sells into with representation of a cooperative, sells into various off-takers. If there was some way that all the players from that lady all the way to the marketeer, could have inputs into a common system that allowed for, more holistic transactional data to be captured and viewed, that would be something I think greatly beneficial. And I think another obvious area where I think there's already steps being taken is land administration. There's obviously key benefits to be had in terms of smart contracts and basically taking the administration of land functionality in terms of the titling process, the registry functions, and subsequently, even for governments and city councils across the continent to basically collect fees and levies from their land portfolio from these registries. I think that's one other beneficial application. So those are two right off the bat, but there's several, and I'm sure many of the well-versed individuals on this panel could highlight some of the other potential applications.
Thank you, Carl. I do think that was a fantastic way to answer that question. We have, however, come to a point where we're slowly running out of time. I've noticed it's 11:10. Just want to check in with Bridget, who would be on the line with respect to timing towards the next panel. The question here that had also come with respect to the free trade agreement with the rest of the region, I want to thank Azim because he actually answered this with respect to free trade agreements and the rest of the continent, and just our experience on regional trade and the impact that this may have with some of the other Asian markets. So given our time constraints, I will have to pause our discussions at this juncture. I want to thank each and every single panelist. I think you've done a phenomenal job in unpacking sub-Saharan Africa. Azim, you did a fantastic job of unpacking Mauritius.
Thanks, Daniel. It's also a great place to stay, you know, tropical island, very nice.
Just the impact of COVID.
Hi, I think Danny, my connection might have just kind of dropped off temporarily, but me, I'll kind of take over from here to thank everyone again for the panelists for really being such, you know, engaging speakers and really contributing all of your insights. And also I see Daniel back for really, Danny for kind of taking very skillfully us through all those questions and also the topic at hand. Thanks very much everyone for participating. For everyone else that's still on the line, we encourage you to please stay on because it gives me great pleasure to actually introduce the second panel that we have on today. We have with us Duncan, the Director for Market Access and Research from Africa House, who will be helping us moderate this session. So I'm going to introduce Duncan or encourage Duncan to kind of switch on your camera right now and kind of take over. For everybody else, just a reminder that if you are interested to engage with the speakers, you can let us know or contact us after this event to kind of, if you've got further questions that you didn't have a chance to ask during this platform, or just kind of ask us if you've got any other questions. But now over to you, Duncan.
Thank you very much, Bridget, and thanks for the opportunity. And yes, I'd like to open this panel discussion. We're obviously talking about oil and gas opportunities in Southern Africa. As Bridget said, I'm the Director of Market Access and Research at Africa House. We're a consultancy based in Johannesburg that assists clients from across the world to access markets in Africa across a number of different industries. I'm very happy and excited to have the panel that we've got to talk about oil and gas in Southern Africa. Obviously, we have different countries involved and at different stages of development. So I think I'll go through it in alphabetical order in terms of countries. Mr. Braulio Brito, who's the president of the Association of Petroleum Industry Service Providers of Angola, and also the executive chair of Tradinor Oil and Gas Services in Angola. And we have Ricard Manuel, who is the head of new business development at ENH E&P. ENH obviously is the national oil company of Angola. And I think we're just waiting for Ogbemi Afoya, who's a partner at Helios Investment Partners. There we go. Ogbemi, welcome to you as well. What I'd like each of the panelists to do, if we could start with Braulio and then move to Ricard and then to Ogbemi, is just to introduce yourself and your organization for 2 minutes to the audience so that they get a better sense of who you are. So Braulio, if you'd like to unmute yourself and just tell us a little bit about your organization and yourself.
Okay, Duncan, good morning, and good morning, fellow panelists and everybody else on the audience. As indicated, my name is Braulio de Brito, Angola. I am the chairman of the ACIPA, which is the body, in a nutshell, that answers for the oil and gas service companies in Angola. Well, basically, what we do is to be the vehicle of communication and mitigation of all those common issues or situations that arise or may arise within the Angolan oil and gas industry as a mechanism to interface with the major stakeholders. In Angola, the stakeholders or the main stakeholders are the national agency, petroleum agency, which is effectively the concessionaire, which is a change from our previous regime, where we had the concessionaire and the Angolan state oil company, Sonangol, which most of you may have certainly heard of, as one single body. 2 years ago, with the new government, that has been changed. We have the agency, we have Sonangol. The agency has the concessionaire, Sonangol has state oil company. Moving on, the other major stakeholders as far as the oil and gas industry is concerned, obviously the Ministry of Petroleum, the Central Bank, the Ministry of Finance, Taxation, Ministry of, we call Interior, which is really Home Office, which caters for visas and foreign personnel movement. So we tend to be in the middle of supporting our organization members in mitigating all these issues as the government publishes new regulations or thinking about changing things within the regulatory regime of the oil industry. We are the ones that they talk to ensure that we bring the voice of everybody. The association is made of well over 150 companies or members, ranging from the multinationals that we all know, as well as some very native companies in Angola. So very briefly, this is what we do and who I am. Thank you.
Thank you very much, Braulio. If I could ask Rykard just to introduce yourself and ENH to us. You just need to unmute yourself and give us a couple of minutes sense of who you are and the organization.
Well, thank you very much, Duncan, for that quick introduction. We are pretty much delighted to participate in this year's webinar, and we are confident that this platform represents a tremendous and unique opportunity for Singaporean companies and other companies across the globe that are watching us right now to be abreast of the latest developments regarding the oil and gas sector in Mozambique. So as you conveyed, my name is Rykard Manuel. I'm the head of the new business department at ENH, which is basically the unit that specializes in the development of oil and gas businesses across the entire value chain. Our job is essentially to be the first door for prospective partners to use in order for them to be able to engage with ENH. I believe that over the course of our interaction, I'll be able to present an overview of the status of our projects in Mozambique so that the audience can gain some insight in terms of what we do as a company. So ENH is merely a public company that has been operating in Mozambique for the past 40 years, and it acts as the commercial arm of the state in anything related to oil and gas. We focus primarily on the development of the upstream business, but we do have various units across our portfolios that focus on midstream and downstream business as well. In fact, our mandate is to operate across the entire value chain by creating solutions that can aggregate value to our overall portfolio and balance sheet. So in a nutshell, this is what we do as the commercial arm of the state. Thank you very much, Duncan.
Great, Rykard, thank you very much for that. And finally, Ogbemi, if you could just give us a little bit of background on yourself and Helios Investment Partners. Thank you.
No, thank you very much, Duncan. Good afternoon, everyone. Singapore, good morning, those in Africa. My name is Ogbemi Ofuya. I'm a partner at Helios Investment Partners, an Africa-focused investment firm, active across a wide range of sectors, including telecommunications and energy and financial services. We have been particularly focused on the energy sector in Africa over the last 5 years because we see the significant opportunity in fuel substitution, the switching from oil and coal to gas, across the continent. We are investors in significant companies across West Africa today in the energy space, both in midstream gas infrastructure and downstream fuel distribution. We are very excited about the opportunity in South Africa And I think, this is an opportune moment to just highlight the reason for our bullishness, and also to, highlight potential areas where companies out of Singapore can continue to support the growth and development of these countries in Southern Africa and the growth of the energy sector broadly. So it's a pleasure to be on this call, Duncan, and look forward to an engaging discussion.
Great, thank you very much, Bemi. Braulio, maybe I can kick off with just asking you. You mentioned the changing role that Sonangol is playing and the changing nature of the sector in Angola. Angola, obviously, in a Southern African context, has been an oil and gas producer for many decades, whereas Mozambique is developing some of the largest projects in Africa and in the world in terms of LNG. South Africa sits somewhere in between, having been a consumer and a producer, but at a much smaller level. Sonangol is in the process of rejuvenating itself to focus very much on its core oil and gas businesses. Can you give us a sense of what the current priorities are within that, both from an upstream as well as midstream or downstream in Angola? Where does Sonangol and the Angolan government see the company moving and the industry moving in Angola? You could just unmute yourself.
Absolutely. As I indicated earlier, one of the very first measures that the new government took as the transition happens from the previous regime into the one that we are under now was to, I would say, regulate the way Sonangol used to operate. In reality, regulate the oil sector by segregating the concessionaire function that Sonangol was holding. That obviously created lots of conflicts and quite a few inefficiencies. So we now have the Angola National Oil and Gas Agency, which is effectively the concessionaire, and this body has been under operation for just under a year and a half. As it happens, ASIPA, myself, the board that the body that I run, together with the agency, we do have a very straight communication channel as we are trying to reorganize or continue to reorganize the industry. We're going to have a meeting next Thursday in line with this proposition of see how best we can really make our industry more efficient, more competitive, and of course, more attractive also for further foreign investment. Going back to your question, as far as Sonangol, what is in process now, apart from the actual internal reorganization, change of personnel, realignment of functions within the organization, we also see a massive drive in divesting all those businesses that are not core to an oil and gas company. As we know, for various reasons, or you may not know, but the way it was before, Sonangol was carrying a very interesting, for lack of a better word, portfolio, ranging from oil and gas, I mean, you name it, hospitals, public health, building, transportation. I mean, it was, looking back, all over the place. What the government is doing now, what Sonangol is doing now, under the government's guidance or Ministry of Petroleum guidance, is really to streamline and divest all those businesses that are not core to an oil and gas organization. And of course, there is a operators branch of Sonangol, which is Sonangol PNP, which again is being empowered to really move on or become a de facto operator representing the state, the government. but everything else is being divested. And again, streamlining Senegal to see if we really get a more efficient and real oil and gas company.
Perfect, thank you. Yeah, I think it probably does speak to the overall Angolan desire of the government under João Lourenço to transform a lot of the state-owned companies into more streamlined units that have a much more streamlined focus. And I think having spent a lot of time in Angola over the years, it's a very welcome move to see that. Right, can you set the scene for us in Mozambique? There are a number of different LNG projects that are ongoing, and I think if you could just highlight the key ones. We know about the Total project, the ExxonMobil, the ENI offshore, but there are a couple of others as well. And maybe you just want to give us a sense of where they are in Mozambique at the moment. And I think allied to that, has there been much, because these are fairly early stage projects, has there been much impact on the delivery of those projects by the COVID pandemic? Has it impacted at all?
Well, surely. As you know, there's two major projects currently being developed in Mozambique that have resulted from the massive discoveries of natural gas in the Rovuma Basin, which is in the Cabo Delgado province. For those of you who don't know the geographics of Mozambique, that is in the northern part of the country. So the first project, which is the one you have mentioned, the Area 1 project, which has been sanctioned, the FAD in this case in 2019, is being currently led by Total. The investment strategy that we have devised in order to accommodate the projects that needs to revamp Area 1 is in the realms of $24 billion US. In the project itself, we have 2 trains that comprise a total capacity of production of 12.88 MTPAs. And as of today, 11 million tons per year have already been contractually agreed with off-takers. And we're expecting, despite the current situation, production to start up in 2024. The second project that you have mentioned is the Coral South project. This was the project that was initially conceptualized back in 2010, and the FAD was sanctioned in June 2017. It was actually the first of its nature in the region. The operator for this particular project is ENI, and the investment plan that has been devised for this project is in the realms of $10 billion US. We are talking of a production capacity plant of 3.4 million tons per year. There is a single off-taker, which is BP, and the construction at this stage, because this is a floating LNG facility, is at approximately 75% that is being conducted in Korea. The last project, which is a project that has been highly impacted, not just by COVID, by the dynamics of the markets as well, is the Area 4 Rovuma LNG project, which there is a little bit of uncertainty as of today in terms of when the FAD will be sanctioned. But it's a mega project that we are intending on developing over the course of the foreseeable future. And it comprises 2 trains and a plant capacity of 15.2 million tons per year. The off-taker strategy that we have adopted for this particular business is to allow the subsidiaries or the affiliated buyers of each concessionaires to take off the volumes and sell in international markets. So there's, as I said, there is a little bit of uncertainty regarding the Area 4 projects. In respect to your question regarding the impact of COVID on the project, I would say that COVID has been really detrimental to our economy as a whole. Not just for the concession itself, but particularly for small and medium enterprises, which have been highly impacted by the pandemic. Most of the SMEs in Mozambique have been forced to shut down or limited in some degree because of the consequences of COVID. Big corporations such as ourselves and the multinational corporations have also faced a lot of adversities that persist till today. If we look at the schedule from the perspective of Area 1, we will be able to notice that there was a 6-month delay in respect of that particular project. RFO, as I've mentioned, was impacted as well by COVID, but it was not the only factor that contributed to the delay of the FID. A lot of elements contributed to that in terms of price dynamics of LNG in the market, access to funds in order to support the project. So there is a lot of elements that have been considered in order to make a decision of such nature. Another thing that has been highly impacted in Mozambique due to COVID is the supply chain and logistics. Because of the lack of mobility of many of the suppliers, we saw a couple of delays in the projects in terms of execution. There's been reduction in revenue that stem mostly from the suspension and interruption, in this case, of contracts that took place. So it has been a very problematic situation for Mozambique, but hopefully throughout the years, we hope to see the first signs of recovery and ramping up of activities moving forward. The only way for us, I think, to be able to operate in full stream will be to have vaccination taking place and people being able to gain herd immunity within the country. That is the only way we see this thing moving forward on full stream.
Okay, fantastic. Just to contextualize in terms of logistics and supply, to put it into a context that perhaps the companies from Singapore would understand a little bit better. From the capital, Maputo, and the key port in the south to Cabo Delgado, where the oil and gas developments are taking place, is about 300 or 400 kilometers further than it is from Shanghai to Beijing in China. So you're looking at about 2,600 kilometers in total, but you don't have the high-speed train that they have between Shanghai and Beijing yet. So I think that just to put it into context. Obemi, South Africa, we sit between these two countries, one that is an oil producer of many years standing, one that is developing the biggest gas projects in Africa, in fact, the biggest investments in Africa's history. We sit as an industrial powerhouse between them. We've talked a lot about gas and gas to power in South Africa over the years without really getting very far. Do you sense that there's a change happening at the moment? And if why, are you excited about it? Where do you see South Africa sitting?
No, thanks, Duncan. And I do agree with you. It's probably been almost 2 decades of ongoing continuous conversations about gas in South Africa. It's been an ongoing conversation, but I think a combination of circumstances have made this current wave of efforts and conversations look more concrete than ever before, partly driven by just the requirement for secure energy supply in the country, long term, and also the power sector needs. As you know, South Africa is going through an extensive, power procurement program, which started with the renewable rounds, in 4 or 5 years ago, and have continued with the ongoing Pemba round and the soon to be announced, future rounds across a range of technologies. And I think the power sector will be a big driver of that switch to gas, because as you may be aware, South Africa has an aging fleet of coal power plants, as a source of baseload power today. And in today's environment, sensitivities around climate and just the economics of building this new power plants puts gas in an advantage position, as a source of baseload power for South Africa. So I think this time feels different. It feels that the requirements for the power sector combined with the need to secure long-term, gas supply for an country with an industrial output as significant as South Africa will kind of lead to a number of projects potentially coming up, which allow the import of gas into the country and a long-term transition to gas as a preferred fuel.
Okay, fantastic. Yeah, I think as you say, the new mix that's emerging, the opportunity also to convert some of the existing coal fleet into gas or other technologies is quite exciting as well. So hopefully we can start to see a bit more movement on that. Braulio, we've talked about where Sonangol and where the Angolan government sees the industry moving. We know that there is a new licensing round coming up in Angola for not just the bigger fields, but for some of the more marginal ones. Could you maybe just talk us through a little bit of that? And then also in terms of the regulations for the monetization of the sector, new gas processing facilities, would there be other downstream opportunities in terms of fertilizer production that is being looked at within Angola?
As I heard Riker talking about the COVID challenges that impacted production or development of projects in Mozambique, I would say that in many ways Angola is somewhat fortunate. Yes, COVID has impacted the country a big time, but given the nature of and the importance of the oil and gas industry in our economy, the government and the companies operating in Angola have really put together a tremendous effort to ensure that as maximum as possible continuity in the business. So in reality, we saw a continuous flow and operationship of our industry despite the challenges of COVID. To say that we worked into putting in place lots of safeguards, health and safety safeguards, to ensure some regular mobility from people traveling in from various countries, being able to go offshore and into the operations without really contaminating other employees or other colleagues. So in a way, we have been able to do that. What I'm trying to say with this is that the nature of our economy and the way the oil and gas and the role that the oil and gas industry plays in Angola will always have Angola open for businesses, open for opportunities. So there will be challenges. Oil price is one that comes to mind. When it is, we had the world had a massive downturn in 2020 a couple of years ago. But despite that, all the major operators, all the major service companies are still in Angola and trying to maximize their opportunities with the adjustments that need to be made. As far as concrete opportunities in the sectors that you mentioned, the government, together with Sonangol and international financing houses, have embarked into building some major facilities, refineries, mainly one up north and one in the south in Lobito, which is actually a refinery that has been going on. The construction of such has been going on for a few years. Only now that the financial resources have been found, and those two refineries, one in Soyo and the other one in Lobito down south of Angola, are being effectively constructed, built up, and there is a major revamp of the Luanda refinery, Luanda being the capital of Angola. And those three will certainly provide, make Angola self-sufficient as far as oil and gas derivatives, and potentially with a capability to export into the neighboring countries, potentially, or even further up. With that, opens opportunities for side industries like the ones you mentioned, the fertilizers. I haven't heard of any major fertilizing plant being built in Angola. But again, given the nature of our economy and the strategic program that the Angolan government has as far as diversifying from the oil and gas and focusing into the agriculture, fertilization plants or anything, any industry that is related to the promotion and development of industry, of agriculture rather, and the industry for that matter, will be very, very much welcome. So no, we don't have any fertilizing plants, at least in the public domain, but those are areas that the government has been canvassing for foreign investment or investors in general.
Thanks very much, Bralito. Just to build on that, for our guests from Singapore, and I'm happy to share the list of products with Bridget and the Enterprise Singapore team. Angola has a list, I think it's 42 products that are on a banned list of products, which will be phased in over the next 4 or 5 years. And a key part of that is agricultural self-sufficiency and turning Angola, which has magnificent agricultural lands, into a self-sufficient producer of basic foods, and then secondly, also an exporter of foods and commodities. So, you know, I think looking at those linkages between agriculture, fertilizer, and the opportunities to integrate the two industries is an exciting one. Rykard, maybe I can just pick up. You know, we've heard quite enviously, I think, that Braulio sits at the head of an industry in Angola that has over 150 members, from large international companies to domestic operators. His company is one of those, in terms of local content and supply. ENH is the national oil company of Mozambique. You know, national oil companies generally play a catalytic role in driving development of SMEs or local companies into these sectors. Can you maybe just run us through a little bit what the role of ENH is within driving this? And then what is the approach to local content in Singapore? And if a company, in Mozambique, and if a company from Singapore is interested in engaging in that, what's the best way for them to do that? If you could just talk us through that whole development of a local capacity and how technology suppliers from Singapore would be able to tap into that.
Correct, very good, very good. Well, there's many avenues that we can use in order to answer those questions. I'll begin from the standpoint of the local content. Just to mention that there is a huge ongoing debate in Mozambique in terms of the establishment of a local content law. There are many intellectuals that advocate for the creation of a local content law in order to bring the required benefit that the country needs. And there is those people as well that advocating for the non-creation of a local content law, because they feel that that might be detrimental to foreign direct investment in country. But we do have a couple of regulatory frameworks in Mozambique that advocate for the usage of national factors of production within the oil and gas industry, whenever there is the capacity. I would allude to the Decree Law of 2014, which expresses that if there is capacity within Mozambique, and even if the price is 10% higher than the competition from foreign sources, the Mozambican company should be preferred in detriment of the external companies. So there is a lot of things that are currently we are developing in order to accommodate the engagement of the local market within the oil and gas industry. Another thing that I would possibly highlight is the training initiatives that we are currently developed. So we have several initiatives in the pipeline that are specifically aimed at training and uplift of the local community skills. To give you an example, we have secured in all of our joint ventures. Joint ventures is the method that we have adopted for the development of our internal capacity and to get access to funding. So throughout all of our joint ventures, we have devised a strategy that enforces the development of local content through training and through the usage of national factors of productions. The case, for example, of our joint venture with Technip FMC, which is a major joint venture in country, they've been actively involved in the development of those training initiatives. Just on that joint venture in particularity, we have of more than 40 nationals being already trained in France, in Korea, and many other key destinations. And this is all conducted through the usage of on-the-job training mechanics. We are also engaging with several companies across the globe to develop tailor-made joint ventures that look exactly at developing training centers across the country. So our main target is to beef up national capacity in order to assure that those projects are developed by nationals, and this can certainly be done through the establishment of joint ventures with international companies. I'll speak as well in terms of how Singaporean companies can participate on the oil and gas activities in Mozambique. And from my perspective, there is many routes that can be taken in order to accommodate that. The first that I would recommend would be to engage with the main stakeholders in country. I believe that this will be of tremendous value to any company that is looking to engage in Mozambique. The conceptual model would be, for example, the establishment of joint ventures with Mozambican markets. If I were to allude to what Total has been able to come on stream a couple of years ago, relating to the figure for the allocation of 2.5 billion US dollars that was supposed to be utilized by Mozambican-owned companies or Mozambican-registered companies. So this is what I wanted to highlight. So because this is an actual package that can be benefited from external companies, with the likes of Singapore or any other country, if they were to partner, for example, with a national company like ENH. So there's a lot of opportunities that can be driven and exploited if there were to be synergies developed among our units of productions and external parties as well. The second point that I think it can be a route to take in order to get more traction between Singapore and Mozambique will be the participation in conferences such as this one to gain sight of the latest developments and business opportunities in Mozambique. We do have several conferences as well in Mozambique. I'll give you an example, the Mozambican Gas Summit, which is the biggest conference in Mozambique. That is, we have in excess of 4,000 people participating every year. And there is a lot of momentum and traction that is built within those conferences, and you'll be able to gain sight as well of the latest developments of the industry. The third point will be to register the company in the database of the concessionaires and their subcontractors. Total, for example, has the Achilles platform that any prospective supplier may utilize in order to register themselves to provide services in Mozambique. You may also look regularly to the updates on the websites of the general contractors. So Mozambique adopted a strategy for the development of the infrastructure related to Area 1 and 4 on the basis of selection of general contractors. In Area 1, for example, there's a general contractor, CCS JV, comprised of Chiyoda, McDermott, and Saipem. And on Area 4, there is a general contractor that has been selected by MRV, which is JFT, which is a consortium formed of the Japanese JTC, Fluor, and Technip. So these are the ones who will be managing the EPC package related to the investment that will be done in Area 1 and 4. So there is a lot of opportunities that could be exploited from those two companies in order to gain entrance into Mozambique.
That's fantastic. Yeah, and I think it's worth pointing out that a lot of those companies that you've mentioned are operating not just in Mozambique but across the region. And I know when we met with Saipem, who's the key contractor for Area 1, they were also encouraging our clients to register with them for projects outside of Mozambique. But obviously the CCS JV is the current one in Mozambique itself. So yeah, and I think what you've said makes a lot of sense in terms of how to approach the market. Ogbemi, I'm glad to see you back there. I wanted you hinted a little bit earlier when you said South Africa's had a 20-year journey trying to unlock gas, and we do have quite a complicated sort of government stakeholder map in South Africa in terms of unlocking the potential. But you've also had, as Helios, experience in Ghana with the Tema LNG facility. what kind of lessons do you think you can bring to bear, or what are the pitfalls that need to be avoided in South Africa to unlock the gas potential, and particularly the gas to power going forward?
No, thanks, Duncan. That's a very relevant question. I think the first thing I would say is with LNG, there's always the temptation to view it as a large-scale mega project. Now, I just want to differentiate. There's a difference between upstream liquefaction and downstream receiving terminals. And for downstream receiving terminals, you can make them as small and as simple as you require them to be to kick off the market and to get demand going. So in Ghana, for example, we're starting with a modular terminal comprised of a barge paired with an upgraded FSU, which allows you to serve, demand as small as 500,000 tons. It can scale up to 2.5 million tons. But it just means that to begin to import LNG, you do not need to design a mega project on day one. You can start small and you can scale up demand. And I think part of the challenges South Africa has had historically is LNG has always been viewed through the lens of a mega project. Let's start with a very large 3.5 million ton terminal, for example. So that's the first thing. And once you start small, a lot of the problems you will typically encounter naturally fall away, because it means that with a regasification barge, which can be built in a Singapore shipyard, by the way, we built the one for Ghana and China, but definitely there are Singapore shipyards who have the expertise and capability of doing this. You can build it, bring it to site, and you can kick off the LNG value chain. And the other advantage I will say, or the other lesson we've learned from Ghana, is once you make a project smaller, it then becomes easier to finance. And so, instead of requiring a syndicate of 12 banks, you can work with a syndicate of 3 banks or 4 banks, for example. So it's all about reducing complexity, starting small and in a modular manner, and working, of course, with highly competent partners and stakeholders. We partnered with Gasfin, the specialist LNG developer. We worked with a wide range of stakeholders, shipyards in Singapore like Sembcorp upgrading the FSU, a shipyard in China building the FRU, and just working with competent technical partners to support delivery. But the big message is, you can start small and modular, you can scale up over time. Once you take that approach, a lot of the associated challenges with delivering infrastructure falls away. And the moment LNG is accessible to the market, you find out that a lot of people or users, industrial and mining users in the Southern African context, who are paying over the odds for diesel, are now able to switch to LNG as a fuel for their mining trucks, their mining power units, and the logistics trucks. And Singapore has very good experience with delivering such solutions to end customers, because we've had Singapore LNG operating now for quite a while, and a whole ecosystem developed around Singapore LNG. You have the people who do the bunkering for the marine vessels, who do the ISO container reloading for onshore delivery, and so on and so on, and so on and so forth. So the question is, how do you start? You start by reducing the problem to the minimum possible size, launching a terminal, and then once that terminal is built, all the other consuming countries around South Africa, Namibia, for example, will have demand and mining use, can now begin to load and use from the receiving terminal that has been built in one location in South Africa. So, the big takeaway, start small, and then there are just many partnerships potentially in Singapore due to the ecosystem around Singapore LNG that will be relevant in this market.
Baby, I think that's such a critical point. I think sometimes in Africa, our ambitions are larger than our ability from a financial, technical perspective to deliver projects. So whilst it's great to have ambition, it's also great to be grounded in reality. And I think the lessons that you're bringing around modular and scaling up of LNG facilities is definitely one that we need to take into play. I'm cognizant of the fact that we only have a few minutes left, and we still want to get through a few questions. So what I'd like to do, just to round out the session, if each of you, and I'll start again, perhaps with Braulio, just to look at ancillary opportunities. We've talked a lot about the actual LNG, but obviously, particularly in areas where there's not that much infrastructure, what are the ancillary opportunities for companies to engage in terms of roads or power or other developments that you see being unlocked by these developments? Braulio, if you'd like to kick us off in Angola?
Sure. Sure. Thank you, Duncan. I think I would look into opportunities in Angola as on a three-prong. Oil and gas, it's always a continuous source of opportunities. Agriculture, industry, encompassing energy as well. If I start from the bottom, energy, again, Angola is a very vast country, and given the recent history, the wars and everything, we still in need of developing its core infrastructure, be it roads, be it energy power stations, power lines, intermediary stations within the country. And then, as far as agriculture is concerned, same thing. There is a tremendous amount of land available, very fertile land. Hydric reserves, one of the largest in the world, so there is potential for that. And most of those areas are completely untapped. So opportunities range within agriculture, and with that, all the auxiliary businesses like fertilizers, fertilization, like small factories or not. It depends on the appetite of the investor for things like edible oil factories, for instance, HSE equipment, you name it. We really are at a stage, Angola is really at a stage where almost anything is an opportunity as far as FDI is concerned, or even local investment for that matter. So it's really a very wide range of opportunities. I mean, rice, for instance, we are looking for companies or opportunities or companies that can really help us produce rice. We have the land, we have the climate, we need the technology, we need the expertise for that. And the amount of land we have, certainly there is an opportunity to export in the region. So this is what I think are the focus of opportunities that companies from Singapore can look at. And pointing on the what Reichert said as far as ways of entering the country as far as business is concerned. Again, we have the APEX, which is the agency that promotes foreign investment, is always a good connector of to help anyone enter the country, but then going through the major stakeholders as well. Then if you're into the oil and gas, surely you can approach through the agency, the concessionaire. You can approach through various companies that are already established in Angola. You can approach through a CIPA, of course, and local business advisors. We do have quite a few people interested in helping people come to Angola and set up businesses. The political, social, and economic framework right now, I would say, without any qualms, is very, very, very stable. Politically, I think we are on the right path. Just a few minutes ago, the president announced a revision of the constitution, which is unprecedented. We never had such a, I would say, open government and an open president willing to address head-on the criticism that the society has been putting in front of him. There were 3 or 4 items in the constitution that has been a source of various debate, and just now, and again, he didn't pre-announce. We only knew that he wanted to address the nation, and then bang, he just came out and said, look, everybody's complaining about it, let's talk about it. And then I'm declaring a revision of the constitution. So to say that politically, there is a very good dynamic going on of openness, transparency. There is a massive fight against corruption, which is really, bringing the country to a level of business opportunities more in line with the international community. Economically, yes, we do have challenges. I mean, I wouldn't say otherwise, but then exchange rate has been stable for the last 2 years. The economic measures from the central bank are being very robust. One of the measures that the president just announced a few minutes ago is to make the central bank a totally independent body. So basically, like we see in other parts of the world, the governor of the central bank will be an independent body appointed by an independent body without interference from the government. This is massive as far as transparency, economic stability, economic and social stability for that matter. And as far as social stability, again, there's challenges. The country is under a massive transition, but it's a safe place to come. As I mentioned, we have all the international operators here in Angola safely for the last, 30 years, be it operators, service companies. This is within the oil and gas industry. Civil construction, same thing. Agriculture, we now start to see some of the major organizations also coming into Angola. So there is opportunities, auxiliary businesses as far as the mainstream of the major business lines, oil and gas, agriculture, industry, power, and energy. But then, it's really up to you guys, investors out there, to try Angola. It's really a good time to invest, a good time to come over and take advantage of what we have to offer. Yeah. Thank you.
Perfect. Thank you. Thank you very much, Braulio. Rykard, in a couple of minutes, the ancillary opportunities in Mozambique are huge. Can you summarize very quickly for us what the opportunities are for companies?
Sure. Well, my introduction would be in line with what Braulio has said regarding Angola. I believe that we are a country that have similar genetics with Angola. We have access to land and the resources, but we don't have the financial capacity and expertise to develop the project. This is why the government of Mozambique is focusing very much on the development of ancillary projects, such as the domestic gas projects, in order to revamp the economy and reduce the stress in terms of importation in the country. So as you know, Mozambique has secured around 900 million scarfs that will be taken from Area 1 and Area 4, 400 from Area 1 and 500 from Area 4. So there is an ample space for the development of industrial projects using domestic gas allocations. We are talking about fertilizer plants, which is something that is already being structured and devised by the government of Mozambique. We are looking at the possibility of developing methanol plants in the country, generation of fuels, which is a project that was previously conducted with Shell, gas to power projects, and the list goes on. So, well, the main rationale that we have within the country is to set up a structure for the development of industrial projects that are aimed, as I said, at reducing the importation levels in the country. We have a couple of logistical solutions that we have developed over the course of the past years. One being the Pemba Logistics base, or the Oil and Gas Service Center, which some of you may know. This is a dedicated oil and gas infrastructure that has been developed in order to cater for the oil and gas needs, and particularly the needs of the Rovuma Basin project. It's one of our anchor projects that has been developed in partnership with Nigerian company called Orleans, and they've been conceptualized in order to create a one-stop shop solution for prospective clients and suppliers operating within the realms of the oil and gas sector. The idea is to maximize the economies of scale, and with that, there will be a lot of opportunities that could be generated as a result of the construction that will take place. It is also important to mention the ancillary services as well that will be required from the 5th bidding license round that took place in 2015 in Mozambique, which brought the emergence of a couple of companies in Mozambique, including ExxonMobil, Rosneft, the likes of Rosneft, and many other players in the markets. We will have opportunities linked with the construction of temporary camps and workshops. All the ancillary services will be required in order to support the appraisal stage of the project. We are talking about PSVs, camp construction and management, road, drainage, fencing, scaffoldings, a lot of services that will be required, including rotary and fixed wings as well, which is one of the things that we as ENH are looking towards developing in Mozambique. So there is plenty of opportunities in order to derive and to develop the ancillary portion of the oil and gas business in Mozambique.
Perfect, thank you very much. Ogbemi, I think South Africa is possibly a slightly different case. What do you see in literally 90 seconds, what do you see gas unlocking or oil and gas unlocking from a South African perspective?
No, I see it unlocking increased productivity by lowering the cost of energy. That's one. And I see the ancillary services, everyone involved in the logistics supply chain for delivering chilled gas to the end customer, either cryogenic equipment manufacturers, ISO container manufacturers, logistic planning and services providers who've got the experience they've developed in Singapore and Southeast Asia. Definitely there's a whole range of opportunities to serve the downstream markets as they switch to gas as a fuel.
Perfect, thank you very much. Okay, we do have a couple of questions. The first one from Stanley Coe, I'm going to leave to Reichardt to deal with him directly because that is a very direct question. But I think what we would like to just delve into is the thoughts around training for IR. Is it going to impact on the industry in Southern Africa? How can Singapore companies access those opportunities as local development becomes more important? I think some of that has been talked to already by Reichardt in terms of the programs that ENH have got running, and obviously the key investors who are putting money into local training and skills development. I don't know if any of you would like to tackle the fourth industrial revolution and is it going to have an impact on the sector in Southern Africa? Perhaps Braulio or Reichardt, do you want to have a look at that?
Braulio, you may.
I can have a stab on that one. I mean, the industry. I mean, Angola or Africa, I would say Southern Africa would be pretty much in line with what's happening around the globe. If we look into the oil and gas industry, we see the same trend of evolution, technological evolution in Angola, for instance, and certainly in Mozambique. I remember many years ago, a few years ago, we set up in country a plant to test and manufacture and test Christmas trees, for instance, something that was unheard of anywhere in Africa. So to say that as long as the opportunities for businesses are here in the region and technology is being developed all around the world, there is no doubt that African countries will follow with that. And again, if we talk about agriculture, we'll see that new technologies are being brought from more advanced countries into Angola. So we will not develop new technology, but we'll pretty much piggyback, if I may say that, on what the world is offering, and with that surely accelerate the development of opportunities, the extraction of the resources that we have. And then, of course, at the end of the day, the more important thing is to ensure that those resources are effectively conveyed for the benefit of the people and not just for the few. So the challenge here is, as you advance technology, you make the countries more advanced, more modern. We also need to ensure that there is enough transparency, enough compliance, and again, as I said, we need to ensure that the benefits are really filtered throughout the country.
Perfect, thank you. Reichardt, I just want to pick up, there's a question from Enoch Ang, who says he's been in Maputo years ago to facilitate training of gas and pipeline engineers in your ANP and other sister entities. 2 questions. What is the status of renewable energy in Mozambique? And would you welcome the advent of emerging hydrogen industry like with Anglo in South Africa? And then what's the situation in northern Mozambique right now? I'm not sure if we've got time to get to both of those questions. Bridget, if you would just like to indicate where we are in terms of time. But I think, yeah, if you, Raikard, I don't know if you have an opinion on renewables in Mozambique and where it sits in terms of the fact that you're developing such a massive gas industry.
Yes, I'll try to answer all of those questions very quickly. Well, relating to renewables, we are still at the very preliminary stages of evaluating the development of this business in Mozambique. But we have a couple of projects in the pipeline that are looking at hydrogen as a future fuel for Mozambique. We have a couple of partnerships that have been developed precisely to look into this. Regarding the situation in North, I think is alluding to the security situation, which is still problematic, but we do have the full confidence of the government, which is working actively on securing the necessary means to eradicate the problem in the regions. We, as the concessionaires, we are also taking the necessary steps to protect our investments in full coordination with the government. But I believe that this is something that will have a solution eventually, and that no company should feel deterred from investing in Mozambique as a result of this issue.
Okay, perfect. Thank you very much. I think we're pretty much out of time now. I'd just like to close off this session by obviously thanking all of our panelists. I think they've brought a wealth of expertise and knowledge into the room. And I'd like to just maybe sum up with each country the differences that we see. Angola, which is an established oil producer, but going through a transformation into a much more open society. Angola was the last country I was in before lockdown, working on the privatization of one of the ports up there, and I can't wait to get back. But so we see that, but also a huge need. Angola is an incredibly import-dependent country, and the opportunities to unlock some of that in a country with such fantastic resources. Then we have Mozambique, which is kind of the new kid on the block in terms of the oil and gas industry, but it's a very, very big kid. If you look at the size of the opportunities, and I think Raikard has maybe been a little bit on the back foot in terms of the level of investment. If you look at over the next 10 years, what could unlock in Mozambique is anywhere up to about $130 billion worth of investment in the LNG sector, and not just in Cabo Delgado in the north, but also some of the gas to power projects in Matola outside Maputo, the floating regasification units, that kind of thing, pipelines to South Africa. So we see, again, a really, really exciting opportunity being unlocked in Mozambique. And for companies to get involved in the infancy of this industry and to bring the technology, the finance, and the expertise into it for the next 30, 40, or 50 years. And finally, South Africa, which hopefully will become the major or a major off-taker of gas from the region and downstream petroleum products from our brothers and sisters in Southern Africa. We already import oil from Angola. There's no reason why we shouldn't import gas and other petroleum products from the region. So we have 3 very different countries, but each one of them offering a really excellent opportunity to engage at different aspects of the oil and gas industry. I think the one common feature is each country does need a lot of skills and technology from outside of the region, and there are definitely a lot of opportunities for companies from Singapore to engage on that. Enoch, I think if you ask Bridget and the team at Enterprise Singapore, they'll be able to provide you with those contact details. I would just like to say from my own perspective, this is probably the most exciting time. I've been working across Africa for the last 30 years, and this is probably the most exciting time that I can remember since the end of apartheid in South Africa and the end of the regional conflicts that we've seen in Southern Africa, to develop long-term sustainable businesses, whether you are a domestic investor or a foreign investor. So I would like to leave you with those thoughts. Bridget, I don't know if you want to have a couple of final words to the participants and to the panelists. But from my side, thank you very much.
Thanks very much, Duncan, and to the panelists for the second panel, Raika, Braulio, and Ogdaimi. Really appreciate it. And Duncan, I think you summed it up really well in the way that you eloquently kind of painted the differences within the region and what you see as the opportunities. This brings us very nicely to the end of our webinar today. We hope that if you weren't considering doing business in Southern Africa before this, you have now changed your mind. And if you've got any questions or like to explore how Enterprise Singapore might be able to assist you in such overseas ventures, please approach us directly. We'll be flashing our contact details very soon on the slide. And one thing that we also wanted to highlight is we've got another webinar that is coming up very shortly in 2 weeks' time, focusing very much specifically on consumer and retail technology opportunities. And with that, thank you all very much. If you could also help us to participate in our post-event survey to kind of give us your feedback, and also, you know, the details of the presentation materials at the start of the presentation, at the start of the event will also be shared across. Thank you all very much. Really appreciate you for kind of sticking it out with us till, you know, this evening in Singapore right now. Thanks very much, everyone. And that is it for me.
Thank you, Bridget. Thank you, Duncan. Fantastic. And nice to see you again, Vikard. Talk to you soon.
It's a pleasure. It's a pleasure as usual.
Thank you, everyone.
Thank you, everyone.
you.
That was
Thank you.
a fantastic session. Right. Cheers. Bye.